Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock markets, closing action, help you understand which way the markets went today, what were the trends emerging like, where were the gains and losses seen, and now, more importantly, how will the markets trade going forward from here as we approach the FNO expiry, the the series expiry as well. So, all of those important points to discuss over the 4 to 5 minutes as well. Let's first look at the closing. Of course, it has happened in the red. The Sensex and the Nifty slipping into the red zone for the third straight session. Sharp sell off in the IT stocks really led to this fall in today's trading session alone. If you talk about how investors have been awaiting the US Federal Reserve's latest policy meeting you later today, and we will come to know what decision the Fed policymakers really take in tonight's decision making as far as the inflation is concerned. There is a big worry on that. The US Fed has been aggressive on the interest rate hike front so far. What course will they take? Will they hike more interest rates, and how will that really impact the global market sentiments? That will be important and key to track as far as the Indian markets go too. Now, as far as the Sensex is concerned, it fell over 300 points or 0.5% lower in today's trading session to slip below the 54,000 mark and ended the day at 53,749. The Nifty also moved 100 points lower in today's trading session, but just managed to hold on to that 16,000 mark towards the end of the session. However, the Sensex swung in a band of almost 700 points throughout today's trading session. So very, very sharp volatility and volatile turns in the markets really coming about today. Also, when you talk about the other specific in terms of stocks, Asian Paints, Adani Ports, Divi's Laboratories, TCS, and UPL were among the top Nifty losers in today's trading session. On the gainers front, you did have far and few between stocks like NTPC, HDFC Life, SBI Life, HDFC and Bharti Airtel really taking or stemming the fall for the markets in today's trading session. It was the life insurance companies that were seeing the light of the day in today's session. Now, except for banks, all the other sectoral indices really managed to end in the red, with oil and gas, metals, pharma, realty, capital goods, and IT, all of them down by 1 to 3 odd percent. The mid and the small cap indices, in fact, underperformed the benchmark indices. The small cap index really falling very, very sharply, almost 3% towards the end of the session, and the mid cap shedding 1.9% as well. Of course, if you see the Nifty Pharma Index, most of the stocks here fell into the red zone, with sharp falls coming in for granules, especially almost 7.8% change on the downside. That was the worst performing stock in the Nifty Pharma Index in today's trading session. Oro Pharma fell 3%. Divi's Labs again 2.8%, continuing its downward trajectory. In fact, the stock has moved almost 14% down in this month alone so far. So very, very sharp declines really coming in for that stock too. Apart from this, if you see, what are the experts really making of this kind of a fall? Vinod Nair, who is the head of research at Geojit Financial Services, has constantly been maintaining that the markets are tracking the global mixed cues at this point in time. Of course, the Fed minutes will be released, and that will be evaluated for the details on the upcoming rate hikes. And in a whipsaw market, the investors can perhaps, his suggestion is that one must resort to defensives and value stocks and sectors at this point in time as well. Although S. Ranganathan, who's the head of research at LKP Securities, believes that a look at the mid and the small cap indices today is reflective of the damage done outside the benchmark indices as well. So benchmarks is one part. Lower below the surface, you are seeing more declines really coming about. So of course, he said that on a day when Bank Nifty was steady, the other sectors like IT saw intense profit taking. FIIs with geopolitical issues and supply side disruptions are also taking center stage at this point in time. Declines have outnumbered the advances in the broader markets. And even though measures to rein in inflation were taken to curb the exports in sectors which have earned bumper profits right now, that is going to be an important point to watch out for. What do the experts in terms of technicals really believe that the markets are heading on to? Srikant Chauhan of Kotak Securities believe that at this point in time, the short-term market structure is still weak. However, it is in an oversold territory, which means that there could be buying action and a pullback that you can expect very soon. For traders, he believes 16,000 would act as a sacrosanct level. If the index succeeds to trade above the same, then it could move up to 16,250 kind of levels too. However, below 16,000, selling pressure would definitely intensify, and there could be some chances of hitting 15,900 and 15,850 kind of zones as well. So keep an eye out on the markets. There's still going to be some volatile turns, and as we approach the expiry, there could be some very, very sharp moves on either side, even in tomorrow's trading session. Let's keep our fingers crossed and see how the Fed really moves on the interest rates and how the global markets really react to those decisions as far as the overnight US markets are concerned and the early morning Asian markets are also concerned. Keep you posted with everything that's developing on the D Street. But also, more importantly, you are getting to see live and exclusive coverage right from Davos 2022 as Rahul Kaval and Siddharth Zarabi keep getting you all the on-ground coverage and the top exclusive conversations with the global leaders and politics and business right here for you on Business Today. So definitely stay tuned onto that as well.